Happy Tuesday, everybody. Welcome to another episode of Market Update, where we discuss leading financial and economic developments in Europe, Asia, and North America. My name is Tony. Let's jump in. And first up, tomorrow, Wednesday, is Budget Day for the UK, and all eyes will be on Chancellor Rachel Reeves, who has no easy task before her. She must find as much as £30 billion to repair the nation's finances, forcing her toward a patchwork of smaller, politically sensitive tax changes. She must reassure bond investors unsettled by shifting signals, uphold Labour's manifesto commitments, and mollify restive backbenchers pressing for policies to revive living standards. Before the U-turn, Reeves had sought to impress investors by vowing to tame inflation and build a larger fiscal buffer, even hinting that working households might bear more of the tax burden. But the prospect of breaching Labour's pledge not to raise income tax, national insurance or VAT, value-added tax, proved a breaking point for many MPs, members of Parliament, especially amid rumours of a leadership challenge. Once Reeves pulled back, gilt markets, bond markets, surrendered roughly half of the rally sparked by her earlier hawkishness. Her delicate balancing act unfolds against a backdrop of global fiscal anxiety, from France's budget standstill to volatility in Japan and unease over US treasuries. The UK's own recent trauma, Liz Truss's unfunded tax cuts in 2022, still looms large. Starmer's political standing has deteriorated since his election landslide, and recent political intrigue has revived questions about his future. It marks a stark contrast with the optimism that greeted Labour's election victory, when global investors expected a Blair-style revival of stability and business-friendly growth. Reeves's first budget, one of the largest tax-raising packages in decades, shattered those hopes, with levies on employers and the wealthy driving fierce backlash. Reeves has since pledged not to repeat that experience, yet meeting her fiscal rules will require at least £20 billion of savings, even before demands pile up for benefit reform, VAT cuts on energy, or another freeze in fuel duty. With Labour MPs resisting spending cuts, Reeves may be forced into a messy collection of narrow tax measures, an approach veterans warn is fraught with political and economic risks. Still, the Chancellor insists her broader strategy remains intact, tackling inflation in regulated sectors, reinforcing the fiscal framework, and unlocking long-term growth through investment and deregulation. Markets remain somewhat hopeful but unsure of her path. Reeves has been booed before and survived, but as she prepares to deliver a budget tomorrow that could define both her premiership and Starmer's, the stakes are high for the two politicians. But with the fiscal and economic health of the entire nation on the line too, the stakes for the UK are much higher. Now, while we're on the UK, we note one more quick development before we move to North America. Multiple UK-based outlets are reporting that the British government has approved London Heathrow Airport's £49 billion, $64 billion proposal to build a third runway and reroute part of the M25 motorway. Ministers opted against a cheaper rival plan, which had suggested a shorter runway without moving the major highway. Heathrow's expansion would add a 3.5-kilometre runway, boosting annual capacity to more than 750,000 flights from the current 480,000. The project, however, comes with significant disruption. Over 750 homes would be demolished, and a portion of the M25 would be pushed into a tunnel. Airlines, including British Airways and Virgin Atlantic, have criticised the plan, warning that the already costly hub could become even more expensive. Still, the Labour government has thrown its weight behind the project, aiming to begin construction before the 2029 election. Next up, investors are increasingly funneling money into nuclear energy as the artificial intelligence boom drives insatiable demand for clean, dependable electricity. Yet despite rising enthusiasm, the sector still faces stringent safety rules, lengthy permitting processes, and some of the highest capital costs in the energy industry. The latest sign of momentum comes from X Energy, backed by Amazon, which has secured a $700 million fundraising round, one of the largest ever for nuclear reactor development. The deal brings its total capital raised over the past 13 months to $1.4 billion, as it races to fulfill major contracts with Amazon, Dow Inc. and Centrica to deploy nearly 150 small modular reactors, SMRs, across the US and the UK. SMRs, which generate less than 300 megawatts of electricity, are pitched as cheaper, faster alternatives to traditional large-scale reactors. They have attracted a wave of public and private backing. The US government recently signed an $80 billion agreement with the owners of Westinghouse, supported by Japan, Japan to build a new fleet of reactors. Google and NextEra have also agreed to reopen a nuclear plant in Iowa to serve Google's energy-hungry AI data centers. Investor excitement is evident in the soaring valuation of Oklo, a Silicon Valley nuclear startup backed by Sam Altman. Though the company has no revenue, no operating license, and no binding power contracts, its market value has surged past $20 billion. The UK, where nearly all operating reactors will retire by 2030, warns of rising construction bills, with Hinkley Point C now expected to cost £46 billion. In the US, companies are urging Washington to share more of the financial risks as the country targets 10 new reactors by the end of the decade. Next up, we move to Asia with our final development for today's episode. But just quickly, if you'd like to continue to be on top of updates like this through grounded and sober analysis, consider subscribing to the channel, and if you're getting some value from today's episode, don't forget to hit the like button. Next up, and finally for today, Pakistan is facing mounting pressure to confront its rapid population growth, with senior officials warning that the country's 2.5% annual increase is incompatible with long-term economic stability. Calls to declare the trend a national emergency are growing louder as policymakers struggle to reconcile demographic momentum with stagnant economic performance and stubbornly high poverty rates. At an event in Islamabad this week, the finance minister cautioned that Pakistan's current trajectory risks overwhelming national resources. Quote, high population growth strains national resources, public services, and future planning, end quote, he said, noting that economic reforms alone cannot secure prosperity without addressing demographic pressures. The sentiment echoes warnings issued by lawmakers in October when members of the Parliamentary Forum on Population urged the government to officially classify population growth as an emergency. The planning minister had already framed the issue in similar terms back in July, describing population management as essential to national survival. Pakistan's 2023 census recorded a population of 241 million, up from 207 million in 2017, an annual growth rate of 2.55%. World Bank estimates are even higher, placing the population at 247 million. Either way, Pakistan remains one of the world's fastest-growing nations. It surpassed Brazil in 2009 to become the fifth most populous country and is projected by the UN to rank third by 2053, behind only India and China. While population growth can expand the labor force and consumer base, economists warn that Pakistan's economic fundamentals cannot absorb the surge. Nearly 45% of Pakistanis live below the poverty line, and wage and employment growth continue to lag behind inflation. Analysts argue that the population growth is already undermining Pakistan's social welfare systems, intensifying pressure on education, healthcare, housing, water, and employment. Political analyst Sabok Saeed warned that such strains could escalate international security challenges as governance gaps widen. Though some officials suggest tying social services to smaller family norms, experts widely agree that coercive measures are neither feasible nor socially acceptable. Past efforts, including decades of family planning programs, have faltered amid resistance from influential religious leaders. As Pakistan debates its demographic future, the challenge lies in forging a strategy that balances social values with urgent economic and ultimately political necessities. Okay, that is today's episode of Market Update. Thank you so much everybody for watching. Have a good Tuesday, and I hope to see you for the next episode, which will either be tomorrow or on Thursday.